This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on August the 19th, 2011. Our time is 8:43 in the morning Mountain, 10:43 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a show or would like to hear it back, go to Harold's website, HESradio.com, HESradio.com. All the shows are archived there. Harold's other website is RareColoredDiamonds.com. At the start of the second half of the show, we have breaking diamond news. All I can say is you've been waiting for it. We've been talking about it. Finally, it's here. We'll tell you a little bit more later. On the gold and silver side of things, on Monday, August 15th, 40 years ago, U.S. President Nixon announced the end of the gold standard. And here we are, Harold, 40 years later. We're looking at the result of it. Some people think that was a great move, going off the gold standard. Other people believe we're going to have to go back on the gold standard. But I think the results that we're currently looking at today speak volumes, and I think going off the gold standard was a massive mistake.
Well, it's certainly proving out to be that, and again, I'm sure back then they didn't realize the situations were going to be as dire as they are right now. You know, on one hand, I'm ecstatic about what's happening in the marketplace, and I'm going to give an update on the metals in a second. On the other hand, you know, obviously I've got tremendous concern. There's a reason why gold and silver are making these monumental and historical moves, you know, but the fact is that there's other areas that we need to be so concerned about that, again, we just need to keep everything in check because we're heading into the most dangerous waters that we've ever seen. As we've said on the last several shows, you know, over the next 5 years, there's going to be an awful lot of things that are going to happen. Many of them we've never experienced before, but we have a firm handle on what's going on at this point, obviously, you know, because of our recommendations in hard assets like gold, silver, and diamonds. The best news is that gold broke 1850. I mean, congratulations to everybody out there, all of our clients, all the listeners to our shows, everybody who took our advice against the advice of their financial advisors. Again, pat yourself on the back. Congratulations. Gold has hit $1,866 as of Friday morning, an unbelievable time in the marketplace. In actual fact, in the last 30 days, gold has actually gone up $255 in 30 days. For the year, gold has gone up $625. We know that because when we made our predictions at the beginning of 2011, as we always do, gold was at $1,250. We predicted $1,850 gold. Again, congratulations to everybody who took our advice. We saw a $625 move so far this year in the gold market. Again, an unbelievable time. And again, congratulations to all of our listeners and clients. Silver has obviously done extremely well also. As we're taping the show on Friday, silver's up $1.35 on the day. We broke above that important 41.30 level that I've been talking to you about. We actually hit a high of 42.66 this morning. So again, the silver market is on fire. Now, we've seen silver go at the beginning of the year when silver was at $29. We made a very high prediction of $50, and as you know, at the end of April, we hit that $50 level. So again, to all of our clients out there, congratulations. The best is by far yet to come in the markets. The thing is that the currency markets are doing what we anticipated. The U.S. dollar today is down by 38 points. We're at 78.34. We did predict that the U.S. dollar will hit 71.50 by the end of the year. I'm still very comfortable with that number. The fact is that the U.S. dollar is a dead currency and is going to continue to fall. And we know that because the Federal Reserve came out and said that they're going to keep interest rates at zero till 2013. So what that basically means is by doing that the Fed has actually locked in inflation. And the thing is that inflation is one of the major reasons why we recommended that you get into the hard asset market. Because ever since last year in 2010, when they came out with QE2, here's what happened with the inflationary markets. First of all, again, by keeping interest rates at zero, you basically lock in inflation. there's no way in the world that we are not going to have massive inflation. In fact, we have it right now. They just hide those numbers, and you know that. Unleaded gasoline from last year is up 45%. Heating oil prices from last year are up 46%. Corn's up a whopping 71%. Soybeans are up 26%. Rice is up 13%. Pork prices are up 31%. Beef is up 25%. Coffee's up 38%. Sugar prices are up 48%. Cotton prices are up 13%. Gold prices are up 42%, and silver's up 115% as copper prices are up 23%. So that's what I'm talking about. We've got inflation. We've got heavy inflation, a lot heavier than the numbers show us, but again, we don't put any credence in what these numbers actually say. We know for a fact that when you go into the grocery store that you're paying a lot more than you did last year, and that's all you really need to know about inflation. Now, the fact that they're not going to raise interest rates means that inflation is going to go substantially higher. The scary thing is that we could have hyperinflation, and hyperinflation means that the prices of these commodities that I just mentioned to you can go ballistic, and the chances are that that is going to happen, and it's because they're going to keep interest rates at 0%. Now, what's going to happen after that as inflation really starts to pick up and run, and it is going to happen, there's no doubt about it, you're going to start to see the price of gold go up to $2,500, $3,000, $5,000, possibly even $8,000 to $10,000. So thinking that those numbers are feasible and possible, the fact is that $1,800 gold is still a bargain. In fact, the best bargain of them all is by far silver, because we saw what happened when they raised the margin requirements in silver back in May, and it dropped the price from $50 down to $32. We're now back up to $42. We've seen a $10 increase in the price of silver since that happened. But again, silver will go ballistic. There is no doubt about it. If we're petrified about hyperinflation, and we should be, if you do not have anything in the marketplace to protect yourself against that, then you're going to be the same as the 90% of the people out there that just are going to be eaten up by these markets. And the best example I can give you is what happened with the stock markets this last month. The Dow Jones has dropped over 2,000 points. In fact, it dropped over 400 points on Thursday. The TSX dropped over 300 points. It's a very scary time, because that's where most people have their money. We've been saying to get out of the paper markets for a long, long time, realizing the risk in that market and how frightening it is. And for me, as somebody who's thinking very simply, why in the world would you invest in the stock market, in corporations, when there's no growth in the country? In actual fact, it's the last place I would have my money, because in the last decade, 3 times, we've seen 3 situations where the market has taken away almost all of your retirement funds and everything else that you're doing. So again, every market has its time. The time to be in the paper asset market is not now. You're seeing what's happened. You're seeing how fast these markets drop. Do you realize that these fund managers that are in the stock markets are leveraged up to 40 to 1? That's why when the stock market falls as much as it did, you see other markets fall heavily that have nothing to do with the Dow falling. And the reason for that is that they have margin calls. And when they get into these heavy margin calls, they have to sell anything that has any value to it. Now, understand what's going to be going on at this point. We're going to see these markets, gold and silver, stock markets around the world, get very, very volatile. You're going to see massive swings in the market. We've seen $255 basically in the last 30 days in gold, and in fact, most of that move came within the last week, where we saw $150 up in 3 days. So that's the type of volatility that we're talking about. Is it possible that the powers that be and the COMEX exchange will raise the margin requirements on gold and silver like they did before and try to control the market? They can only do it for a short period of time, because they tried to do it with silver. They raised the margin requirements 5 times in a week, dropped the price down from 50 to 32, but we're now back up $10 from that point. As I've always said to you, the fact is that you can never fool with these markets. The trend is always your friend, and they may manipulate the market for a short period of time, but it's not going to last, and the markets come back like a spring, and they come back even that much further. So the fact is that you do not want to trade in and out of the markets. You want to own this metal outright. You want to be in physical gold. You want to be in physical silver. You want to be in physical diamonds. These are the most important assets you could ever own during these extremely difficult times. And if you think that they're confusing now, just wait and see what the next 5 years are going to be. We've navigated through these difficult waters fairly well for the last 10 years. I do have to say I'm extremely extremely pleased and proud of the job that Randy and I have done, alerting you to the dangers that be. But the dangers that are coming up are much more severe than we've ever seen. And the fact is that if you're sitting in the stock market right now, you're probably very stressed. If you're sitting in the metals market, you're feeling an awful lot better and sleeping better, but don't think that we're out of the water. In actual fact, if we hit into the massive inflation markets that we predict we are going to hit, and by the way, there's no way in the world that I see that we're not going to hit that. The fact is that we've gotten through this year, and you know, the thing is, you still go to nice restaurants, you still go on vacation, there's still some money around. But the middle class in the United States is going to get hit very, very badly. And the fact is that we're going to see the economy go into a very, very downward spiral. And the problem with that is that most people don't know what to do when that situation happens. We need to bunker down. We need to be very conservative in what we do. No speculation, no gambling type of thing. You know, the fact that we're in gold and silver and diamonds and they're the only assets that are going up is a phenomenal feeling. But the fact is we still have a long, long way to go. We've got the next 5 years, and if we do things right, we're going to make a ton of money. We're going to come out of this doing extremely well, and we're going to be able to have the money to take advantage of extremely undervalued markets. So again, please take our advice on this. Stick with gold and silver. If you're not in the markets at this point, if you've been listening to this show for the last 10 years, 5 years, 3 years, 2 years, and have done absolutely nothing, again, it's about time that you got up and talk to us and find out what you can do to protect what you have and to get to financial health. We intend on coming out of these next 5 years with a ton of money. All Randy and I want is for our Canadian clients and listeners to come out of this doing extremely well. If we can hedge against the onslaught of inflation that's coming and our clients, you know, do well during these next 5 years, I believe we're going to make a ton of money right after that. So again, if you're not in gold, if you're not in silver, if you're not in diamonds, you still have the opportunity in which to do so, but those are the three most important assets you can own, and it's obvious because those are the only three markets that are going up.
The telephone number to invest in precious metals. The company that Harold recommends that you use is Worldwide Precious Metals. They've been in business over 10 years, the entire time this bull run in precious metals has been on. They specialize in precious metals. That's all they do. They're the experts in this specialized field. They can speak to you about all the ins and outs of investing in gold, silver, platinum, palladium. They're there to help you. Start up your own precious metals investment account today by calling 1-866-623-2002. If you'd like to receive our free weekly newsletter, they would be happy to send it out to you free of charge. We send it out via email every week. The telephone number, 1-866-623-2002. Mark Faber, a well-known financial analyst, came out this week and said, not to own gold is to trust governments. And when we see what's happening down in the United States as Canadians, Barack Obama goes on a little bus tour, and then he goes on a holiday. You have all these politicians, as Harold said a few weeks back, they're on holidays when really they should be there fixing the problem. And I was watching the Piers Morgan show on CNN. They had Howard Schultz on, the head of Starbucks, and he said the same thing. He is shocked that these politicians are not dealing with the problems of the United States. They should come back from holiday and deal with these issues. We warned you in the past about the debt ceiling being an issue that would cause a lot of turmoil in the markets, and we were correct. We saw a major turmoil in the markets when it came to the problems with the debt ceiling and the budget talks that happened a month or so ago. It went right to the wire, and they finally got a deal done. We have another warning for you. The next crisis will be on September 30th. So mark that date on your calendar, September 30th. The issue will be the need to pass a continuing resolution by the House in the U.S. Congress. For more than 850 days, the United States has gone without a budget. The House passed one not long ago. The Senate tabled it. The administration has not offered up one either, obviously the Obama administration. The absence of an approved budget means that the only way the country, the U.S., can continue to operate is through a series of temporary extensions. The last time the United States went through a vote on a continuing resolution was just 4 months ago. That fight went down to the wire. At that time, it was a 50-50 thing that the government would be forced to shut down. In the end, a deal was reached to extend things till the end of the fiscal year. That happens to be just 6 weeks from today. So we have that warning. We could be seeing, obviously, once the